Okay, so I'm going to jump right in. This presentation will probably only take about 30 minutes. I tried to go through it quickly, thoroughly, so that it doesn't take up too much of your time. We're going to talk today a little bit about understanding your health insurance options when you're looking to either grow your business or start a new business, or you're thinking about leaving your job that you have coverage with. So we're going to cover kind of like those different scenarios. So what we're going to be talking about are basically what I said, what your options are, the costs are, what some of the timeframes are for offering different coverages or getting or losing coverage. So you kind of have a big picture idea. So you have a few different options when you're first thinking about your benefits and what you want to do if you're thinking about starting a business. First option is COBRA. COBRA is required to be offered to everybody who is leaving their job and has coverage. You typically have coverage for 18 months. Once you leave your employer, they are required to offer it to you for 18 months. There are some exceptions where you can get it up to 36 months, but those are typically things that happen in a scenario that's involving a divorce or the death of an employee who was covered, or things of that nature. But the typical time frame is 18 months to be able to carry COBRA. Now you can cancel COBRA anytime. You're not locked into it for that 18 months. A lot of times people get into COBRA starting out because they're not sure what to do, and then COBRA becomes too expensive, so they want to cancel it. You can cancel COBRA anytime, but you may have complications in trying to pick up individual covered once you cancel COBRA, because there are rules for when you can do certain things, and we're going to get into that as well. For individual and family benefits, you do have the options of getting into that. But again, I always advise my clients when they are looking at which direction to go to, whether they take COBRA or they don't take COBRA, it's very important to gather all the information before making a decision, because making one decision or another can be final for a specific period of time. So you want to make sure that you have that information. A lot of employers will send you COBRA, but a lot of times you won't get that until a couple weeks after you've already left your current position. So you want to try to be as proactive as possible in getting as much information as you can. And in the meantime, you could gather information for other things, such as, should I go through the marketplace? Should I roll through my spouse's coverage? So those are all things that you can be gathering while you're waiting on COBRA, depending on the company and depending on the HR department. Sometimes it's quick, but many times it is not. And so when you get all of that information, you're going to be able to look at, is it affordable? Which of these options is going to be the most affordable, is going to carry the benefits that I need? It's going to carry the network that I need. And those are all things that, you'll want to discuss with the rest of your family, as well as, definitely a seasoned agent. And because you're going to want to look at things like where you are with your current plan. For some people that they've maybe already met their max out of pocket on their employer plan, it might be best for them to stay on COBRA, even though it might be a little more expensive. If they know they've already met their max out of pocket for the year, they're not going to have any out of pocket costs if they have to have any surgeries or tests or anything like that ongoing. So there's a lot of different variables in deciding which is the best avenue to go. The same thing with the spouse. Your employer coverage for the spouse could be very inexpensive, but when you're adding on, another family member or children, it can become a lot more cost prohibitive. So it's always good to gather that information as quickly as you can in the beginning, because you do have time frames for doing everything. For employer-based coverage, if you're an employer and you're thinking about bringing on benefits to your company, you want to look at what's the cost going to be to the employer as well as to the employee, because the employer is required to cover at least 50% of the employee-only benefits, not the spouse, not the children, but the employee. So 50% of that needs to be covered by the business owner. If you're an individual, or if you're a smaller company with less than 20 employees, the rate for each person is an individual determination. So like when you work for a large company that has thousands of employees, everybody gets their benefit package every year, and you get, options A, B, and C to choose for your health insurance. And everybody's going to pay the same for the employee coverage, whether they choose option A, it's going to be the same price. With companies that have less than 20 employees, it's not a composite rating, it's individual. So it's typically going to be based on age. And the younger you are, the less expensive it is. So it depends on what your employee pool looks like. And there's not really any blanket answer of what would it cost me as a business owner to bring coverage onto my employees. Because if you have an employee base where most of your employees are in their 20s, it's going to be a lot less expensive than if you have employees that are older than that, or if you have a mixture of employees. Somebody in their 20s might be a $300 premium and you're paying 50% of that. Somebody in their 50s might have an $800 premium and you're paying half of that. So those are just some kind of things that you want to consider. And again, you definitely want to work with an agent that is going to be able to explain those different options to you, and be able to research multiple carriers to look for the options that are going to give you the rates that are most affordable, that are going to have the most benefits that you can get. To carry employer-based coverage, most of your carriers are going to require a minimum of 5 enrollments. There are some carriers that will allow you to carry less than 5 enrollments, but typically those aren't carriers that agents will work with. Those are companies you're going to want to reach out to directly. So you're going to have to kind of do a little bit of legwork to find out if we have less than 5 people. And that's not 5 employees, that's 5 enrollments. So if you have 5 employees and only 2 want to enroll, that's going to put you in a bit of a pickle. So sometimes you're excluded from being able to qualify to pick up employer coverage just based on the fact that you don't have enough participating members. Medicare is also an option for people that are turning 65 or 65 and older. A lot of times companies might look to going to doing employer coverage, and people that are at that age, it's going to be at the higher end. But what we have found is that for many people that are 65 and older, Medicare is a better option for them cost-wise as well as benefit-wise. So it's almost a benefit to the employer as well to be able to have them go that route of Medicare, because it's going to give them better coverage and it's going to keep the premiums lower for the employer when they're looking to take on group benefits. So some of this I covered in the previous screen, where you have to have a minimum of 5, and that's just for the employee, not the spouse, not the children. 5 people need to enroll that are employed by the company. And this isn't something that it's not, and I don't want to use the word fabricate numbers, but a lot of times people are like, well, what if I have, I have a business and my friend has a business, and between the 2 of us, we can come up with 5 people, and can we do a group plan that way? It doesn't work that way, because when you enroll in group benefits, one of the things you have to do is provide a Form 941 form, which means that you have to prove to the employer, to the health insurance company that you're enrolling in, that these people are in fact employed and you are paying taxes on them. And that form that you file with the IRS, the 941, is the form that they typically ask for to prove that proof of employment. So a lot of times adding on, adult children that aren't necessarily employed, but, you might be able to get away with, you can be really walking a touchy line by doing something like that. So, and again, the cost 50%. So if you have a husband and wife who are both business owners, think of it this way: even though the company is required to pay 50% because you own the company, for you and your spouse, you are paying 100% of that premium, because it's not someone on the outside that's going to be covering that other half. So that's something to keep in mind, that even though the number is 50%, if you are the owner, your part is going to be 100%. A lot of times for small businesses starting out, or businesses that are going through a little bit of a growth and they want to offer something, but employee benefits are just too far financially out of their league. Another benefit that can be helpful in employee retention would be ancillary benefits. There's things like, I'm sure you've all heard of Aflac. So those are some kind of the ancillary products. You can also do packages with carriers that are employer-based that cover like vision, dental, life insurance, and accident policies. And you can do a group bundling for benefits like that that are very inexpensive. And that's something that a lot of employers will take on, and they'll cover that cost 100% of the employees, or they'll split it 50-50. But it's just nice to be able to offer that because the cost of that is so low. And dental and vision is something that, you know, people do like to have. So it's just an alternative to something you might be able to carry before being able to do full major medical health insurance. There's also a benefit called HRA plans, and there's a couple different methods of HRA plans out there. But what an HRA plan does is it allows you to get, as a business owner, the tax deductions of offering cash benefits to your employees through health insurance. So, for example, it would allow the employee to go out into the market, find their own coverage, and you can offer an X amount of dollars. Let's say you're not necessarily in a place where you can do 50% of everybody's, but you can afford to give everybody $200 a month towards their health insurance. So what the HRA does is it sets it up, instead of you just giving them an additional $200 on their paycheck, because then it becomes a tax bracket issue and it's taxable income to the employee, and it could move them into the next tax bracket of owing more in taxes. But so an HRA is a nice fit where you could say, you know, offer a set amount of dollars, and it can be done in categories. So if you have people that are at just a base employee level versus people that are at a management or ownership level, you can offer different amounts of money as long as everybody in that category receives the same amount of money. So that's an offer that you can do, and that helps employees to be able to go out and get their own health insurance and still get somewhat of a break on paying for it by offering those benefits or that money. And it's a tax break on you because you're paying money into their health insurance. I did a couple of examples here that I wanted to share. So this is something you have to consider when you're deciding on, do I bring on health insurance for my employees or not, is that sometimes it can be detrimental to the employee if you have offered the health benefits through work. Because what happens is once you offer health employment benefits, you exclude them, your employees, from being able to qualify for any kind of subsidy to get comprehensive coverage through the marketplace, unless the cost of their share only is more than just under 10% of their total income. They do not qualify for a subsidy. So for a lot of people, it excludes them. And this is an example of somebody, it's a single mother with 2 children, and the children can either be covered by kid care or be covered by, you know, the ex's insurance or something like that. And so it's just the coverage that the employee needs. If she isn't offered the benefits through her work, she can go to the marketplace and get a subsidy of $514 a month that would help pay for her health insurance. And as you can see from the example, she could get a plan for $13 a month with, you know, reasonable copays for doctor visits and things like that. If she were to be offered health insurance and it didn't meet that 10% income cap, then she would not be eligible to receive any kind of a subsidy. And the total cost of the plan for her would be over $500 a month through the marketplace without that subsidy. So having the conversation with your employees, especially if you're a small group of people, you know, really having conversations to find out if you're going to be able to if you're going to be benefiting them by offering health insurance. So the cost for some of the things when you leave COBRA, for example, many large employees pay far more than 50% of the employee's coverage. They usually pay somewhere closer to 100%. And so if you work for a large company, you can pay very little every month for your health insurance, and it just comes out of your paycheck. When you leave, the employer will no longer cover any part of your COBRA, and you will be responsible for 100% of that. And there's usually, because COBRA is managed through an administrative company, it's not managed through the carrier or your employer, there's a 2.5, usually about a 2.5% administrative fee that's tacked onto the cost of the premium. So a lot of people, they don't realize, they're paying $200 a month for health insurance through their employer, and it just comes out of their check every other week or every week or whatever the case may be. And then all of a sudden they get their COBRA packet and their health insurance is now $1,100 a month, and they had no idea that it was so expensive. It's not that anything has changed about the coverage or the benefits or anything like that. It's just that now the entire cost of the coverage is on you, and this is what it was for the entire cost. So a lot of people are very shocked when they see the cost of COBRA because they don't realize how much the employer was actually paying towards that premium. So the coverage through the spouse can also be an option so a lot of times if two people work for companies that each have coverage at their own, because the employer is covering a good percentage of their premium, instead of having two people on one plan, they each get their own plan through their work because the cost is going to be a lot lower to do that. But when you leave, if you're looking at starting a business and you're going to keep one spouse working so you can keep the benefits, which is very common with new business owners, you can look at getting coverage, getting added onto your spouse's coverage through their employer. Just keep in mind that many companies do not pay any of the family members' benefits. They only pay what's required, which is the spouse's. Now, there are some companies that will help out with that, but I would say 98% of the time, it is not going to be that situation. It's going to be pretty much all on the employee to cover a spouse or any dependents. And so for getting Medicare, we touched on Medicare a little bit. That's pretty much for 65 and older. If you're somebody in that category, I'd prefer you reach out to me separately and we can talk about that and how it would affect you, or what would be the pros and cons to doing Medicare versus any of these other options. For individual and family benefits, there are 4 things when you're doing individual benefits through the marketplace, which is where a majority of the people look to go to compare coverages versus going with a spouse or going on COBRA. And the 4 things that determine what you're eligible for are going to be where you live, meaning your zip code, not necessarily the state, but your specific zip code. The age of the people that are looking for coverage, whether it's 1 person or 3 people, you want to know the ages of all the people. How many people are on the tax return? So even though you may be a household of 4, but there may be an ex-spouse or another parent involved, and one of the children are claimed on that parent's taxes who are not actually in your household. There's different rules to who can be included and who can't be included. So you might have a household of 4, but only 3 of them are actually on the tax return as a household family, and 1 of them is not. So that can make a difference. So everybody's got an individual different situation on, what makes you eligible and how much you're eligible for. And then the household income is the last determining factor on marketplace eligibility as far as subsidy goes, and not just subsidy, but benefits. And we're going to talk a little bit next about the benefits and how the income affects the benefits as well. So when you're looking at income on the marketplace, a lot of people think that I'm just needing coverage for me, so I'm just going to include my income, but it doesn't work that way. It's got to be the taxable household income. So if you have a spouse, and even though there's only 1 person that needs the coverage, the household income is what has to be submitted to be able to determine what the subsidy and the benefits are going to look like. So this is an example of, I did 2 examples. We're going to do, this is someone who's a household of 1 and making $12 an hour. So a person making $12 an hour can get a plan, and actually I'm showing this premium at just under $17 a month, but there are actually plans available that would be free. But I picked this plan because it's got decent benefits to it. You can get free plans that might not be as rich in benefits, but for $17, you can get a pretty good plan that's going to cover, doctor visits, specialists, prescription drugs, lab work, MRIs, hospital, all of that. And this is somebody who's, again, at $12 an hour. If we take the same example and we do that same person at $18 an hour, it's the same exact plan, but you can see the benefit change. So if we go back to the previous slide, you can see that he's got a deductible of $575. and a max out of pocket of $31.50 with co-pays of $15 and $30 for doctors. Now, with the same exact plan, he's got a deductible of $6,200, a max out of pocket of $7,300, and doctor visits start at $30. So there's a lot of determining factors in making the decision for health insurance for yourself as well as for your employees. And that's why I say it's important to have those conversations. And if you need to involve an agent, I would 100% recommend doing that, because if you have somebody who's knowledgeable in the industry, they're going to be able to explain, you know, where that sweet spot is for every person. So I get people all the time asking me, well, what's the average price? Like, what can I get? And it's not one of those things that you could just answer and say, oh, well, you know, it's going to run you about this much, because it literally changes the dynamic from one person to another, one household to another. For when you can enroll, there's different enrollment periods for all of the different scenarios. And for COBRA, it's when you leave your employer. So you'll get notified, and you know, most people try to get that information if they know ahead of time when they put in their 2 weeks, they're hoping they can get that. Typically, COBRA information doesn't come out right away. A lot of times it can take, I've seen it take a month before people get their COBRA information. It really just depends on how on top of it the HR department is, and if they're working with an administrator, how long it takes them to get that packet together. But usually when people call and ask their HR, like, what's COBRA going to cost me? They don't even give them that information. They just let them know that they'll get something in the mail or an email notifying them of COBRA. But it's important to get the information as quick as possible, because one, in the meantime, you're sitting possibly without having any coverage, because now you've already left your job. You're, you know, going down a new path, and you're trying to figure out, what is insurance going to cost me, or how am I going to get my prescriptions filled? I need to know what I'm going to do. So a lot of times people will call before they leave their employer, and at least get the information from me on, if you go for the individual coverage, this is what it's going to look like. So sometimes people, when they get that information, if it looks good to them, they'll make that decision before they even leave their employer and go ahead and get enrolled, so they know there's no gap in coverage. Some people still want to wait and get that COBRA information in, and sometimes they can be waiting for a month, and, you know, to find out whether or not they have the coverage they want through COBRA with the cost that's going to work for them. When you do leave your coverage through work, you have 60 days to pick up coverage if you're going to do it through the marketplace. So when, you know, you kind of need to know ahead of time. If you don't get it within that 60 days, then open enrollment is the next time that you're going to be able to enroll. And that's between November 1st and December 15th. This year, they ran it through January 15th. I don't know if they're going to do that again for next year. But one of the decisions in deciding, do you go COBRA or not go COBRA, if you decide to choose COBRA and you pick it up, and let's say halfway through COBRA, it's no longer affordable for you, and you need to drop COBRA, you can drop COBRA anytime. But if you're not within a window of the open enrollment period for individual coverage, you may be going without coverage until open enrollment. Dropping coverage is not an exception to being able to enroll in individual health insurance. So when you first are eligible, you need to kind of make the decision on where you're going to go at that time. Because if you, let's say you lose COBRA, you decide to drop a COBRA in April or May, you're going to be waiting to enroll in November for January of next year. So you could go several months without coverage. Because if once you enroll in COBRA, the only special enrollment you have from picking up individual coverage is during the open enrollment period, or when COBRA runs out, not when you cancel it, but when it runs out in 18 months. So unless you have another qualifying special enrollment that you can get you coverage in a different time period, you could be doing, you know, you could be having a gap in coverage while you're waiting. And if you decide to go through coverage with a spouse, you have to make sure that if you're going to get on their coverage, that you're going to be eligible to do that through a qualified special enrollment through their employment. So you're going to want to find out through your spouse, if I lose coverage because I lost my job, can I get onto my husband's or my wife's or whoever's coverage immediately, or am I going to have to wait until their open enrollment period? For employer-based coverage, the open enrollment period varies. So it's not like a lot of companies do an open enrollment period at the end of the year for a January 1st start date. But a lot of companies do not. A lot of companies, their open enrollment might be the middle of the year, or it might be in the spring. It just depends on where they did that, their initial enrollment. And the 12-month cycle, which encompasses that. So some of them do it based on when their fiscal year is, if it's in the middle of the year or if it's at the end of the year. So it can definitely vary, and not everyone runs January through December. And then for Medicare, again, there are exceptions. There are special enrollments that you have eligibility to getting onto Medicare, depending on your situation and losing qualifying coverage. If you already have Medicare while you're an employer and you have Part A, but not Part B, there's also different rules and dates to be met for making sure that you don't miss that gap to be picking up Medicare. And again, if you have Medicare questions, feel free to reach out to me at any time. We can have that discussion. And this is the information for SCORE. Most of you probably have some of this information. You've obviously registered to be able to come onto the webinar today, but in case you wanted to get some more information about SCORE for their webinars, you can go to pascohernando.score.org and get that. And then down at the bottom is my contact information. That is my SCORE email address. And then my phone number here at work. You can give me a call. It's my extension if you have specific questions that I didn't cover today. All right, well, thank you guys so much for taking the time, and I hopefully, I kept it just under 30 minutes. So if you're at lunch, you still have time for finishing your lunch. And thank you very much, and you guys have a great rest of your week.